Are you a dentist in British Columbia? If you want to achieve those life dreams of retiring early, traveling around the world in luxury, or even leaving a nest egg to your kids, there's one major decision that you need to make in order to hit your goals. So in this short video, I'm gonna go over some crucial legal and tax information that you need to consider before you make this decision. My name is Steve Parr, and I'm a business lawyer in Vancouver, British Columbia, and I'm here to answer your top questions about growing your wealth as a dentist. It should come as no surprise that over the course of your career as a healthcare professional, you'll be able to make more than a comfortable living, with Canadian dentists making on average over $200,000 a year, and physicians making an average of $250,000 a year, and practice owners being able to easily double or triple that amount in personal income. So with this type of money, you are going to be able to set yourself up to hit whatever goal you have for the future, whether that's retiring early, leaving assets to your children, traveling in luxury around the world, or perhaps driving that fancy car that you've always wanted. However, achieving these goals can only happen through proper tax, financial, and retirement planning. You can't prance your way through life spending money however you like if you truly want to hit your financial goals. Now, the decision that you are going to have to make is if you should become an employee or an independent contractor. Because as an associate in a medical or dental office, your status can be either. It just depends on what you have negotiated and mutually agreed upon with the practice owner. And this decision could change the course of your career for better or for the worse. Some physicians, dentists, and other healthcare professionals are salaried employees, while many others are considered independent contractors whose pay structure is generally a fee for service, and they retain a certain percentage of the billings or collections. Each of these arrangements have their own legal and tax implications that are important to plan for when starting your career. Legally speaking, there are laws that govern and protect your relationship with the business, depending on if you're an employee or an independent contractor. And from a tax perspective, independent contractors must send in quarterly tax installments to the CRA, don't forget, whereas employees have their taxes deducted by their employer and only have to submit a tax return once a year, that T1 that's just coming up right now. There is a higher degree of financial responsibility required by contractors to set aside the required remittances, so be careful about this and don't spend it all at once. If an independent contractor doesn't submit quarterly earnings, they'll actually be charged compound interest by the CRA, which for the second quarter of 2024 is a whopping 8%. Also, consider that employers deduct CPP contributions and EI premiums on behalf of an employee, that's Canada Pension Plan or Employment Insurance premiums, and even pay half of their CPP contributions, which we'll cover off in a minute. Whereas a self-employed individual must pay their own CPP contributions and may choose to pay EI premiums. It's also worth noting that independent contractors can claim certain business expenses against their income to lower their taxes payable, while employees generally have little or no ability to do so. So let's take an overview of the advantages and disadvantages of being an employee versus an independent contractor. Then I'll go over some financial issues that you need to consider when making this decision. So, as an employee, you have a fixed salary, which can be negotiated, and this can provide stability and give you an easier time budgeting personal expenses. This may also help you qualify for a mortgage, as T1 employment income is treated differently than employment income earned as a T4A contractor. You automatically qualify for EI, which would provide you for temporary income support if you were laid off while you were looking for new employment. Note that in most cases where employees get fired or resign, they do not qualify for EI unless you were terminated without cause. Next, 50% of your CPP contributions are paid by your employer. The contribution rate is 5.95% until you make $66,000. This means that if you started your career at 30 and you retired at 60, that would have been over $100,000 paid in by your employer. The fourth and quite self-explanatory advantage is that your employer may offer employment benefits such as paid time off, healthcare benefits, and some companies even offer things such as stock purchase programs, perhaps the use of a company car, and other benefits, etc. The last advantage you need to consider is the potential for severance pay, which in short is money your employer pays if you lose your job through no fault of your own. This could be upwards of a few weeks of income. There are eligibility requirements. For example, you might not qualify if you only worked for the employer for a short period of time, but in general, this does provide some degree of a safety net for employees. Disadvantages of employment are that your set salary may limit you from earning more money. You must pay for EI premiums, meaning that you don't have a choice. Very few of your expenses are tax deductible. You will have less control over your schedule, of course, such as how many hours you work, and you may be restricted from working for anybody else. That is, you have an exclusive relationship with your employer. So back to the advantages of being an independent contractor. Your income is determined by the number of procedures you do and the work you perform. So that means that as an employee, you can negotiate your salary, but as an independent contractor, you have more control over how much you charge and thereby how much you can make. EI premiums are optional, and you do not have to make monthly EI payments. Keep in mind that you will lose your ability to receive EI coverage if you are ever out of work. You will also be able to deduct certain business expenses, which, as we mentioned, may allow you to pay less taxes at the end of the year. And of course, you have the freedom to choose when you work and with what clients. If your client is determining when and where you work and with what tools, then the chances are they're not your client, they're actually your employer, and you are in fact an employee. This can be a nuanced gray area, so be sure to chat with an employment lawyer to get clarity on where you stand exactly. As you can probably tell by this point in the discussion, the disadvantages of being an independent contractor are that you don't have a fixed or minimum income, there's usually no severance pay, you have to cover the other 50% of the CPP contributions that an employer would normally cover, and you don't have any traditional employment benefits. Now that you understand some of the specifics of the working arrangements and are thinking about which decision is right for you, let me share some important topics to consider regarding your finances. First off, student debt. Interest payment on loans with government student loan programs are eligible for a non-refundable tax credit, whereas personal loans from banks or lines of credit are not. Next up, consider your cash flow management. A budget is one of the most underrated tools in wealth planning. It gives you a clear picture of your income and expenses, and it can help you identify overspending. The goal of creating a budget is to ensure that you don't spend more than you make. And as you identify areas of overspending, this will help you allocate your money to smarter areas, such as investing or paying off debt. Now, what happens when you reach a point in your career where you make more than you spend? If you've budgeted appropriately and have been diligent about how you spend your money, you can definitely have some money left over at the end of the month. You need to ask yourself some important questions. What are you saving for? Is it a wedding, a house, a car? Do you want to prioritize growing your money or create passive income? Do you want to open up your own practice in the future? Nobody can answer these questions except for you, and it's crucial for you to think deeply about these questions. Going in depth into asset allocation is beyond the scope of this video, but we can do one in the future dedicated to this topic, so be sure to subscribe. Now, I know people don't like dwelling on this topic, but disability planning is important. You need to protect yourself and your family from any unforeseen circumstances. So first, I recommend that you have at least 3 months worth of expenses saved up in an emergency fund in some sort of liquid form, i.e. a high interest savings account or a TFSA. Second, disability insurance and critical illness insurance can provide you with income support if you become disabled. This might sound far-fetched, but it's a reality that almost 30% of Canadians will experience a disability during their lifetime that limits their activities. The final consideration is estate planning. This is an important tool that will help you reduce taxes, reduce probate fees, and minimize family drama when the inevitable happens and you pass away. Your will is a legal document that will outline how your assets are distributed after you die, and a power of attorney is a legal document that gives authority to somebody else to manage your money and property and act on your behalf during your lifetime should you become incapacitated. This becomes important if you become incapacitated and cannot perform daily tasks such as paying your bills or managing your investments or household. Having an up-to-date will and POA in place can help you avoid unnecessary stress and expense at a time that would be very difficult and to ensure that your wishes are carried out. So at the end of the day, how you manage this is solely up to you. What I've outlined here in this video should help you understand the issues, factors, and overall importance of this decision, but ultimately you need to make this decision that is best for you and your family. So here at Par Business Law, we're able to help you with all things estate planning and corporate law. So please feel free to reach out if you have any questions at all regarding your wills, power of attorney, and we will help you in any way that we can. And if you're interested in more free content on business ownership and other valuable legal information, be sure to subscribe to this YouTube channel.